Okay, first things first. Um, I think this goes through some examples here on the very top, and the theory that I want to put forward to you to use as a part of how you do this is one way in which we want to define premium and discount is not just highs and lows of big moves, although it can be that. The bigger thing that I care about is that when you look at a big range as it's developing, it can, or you can look at a range as it's developing, you can go, okay, well, if I said this is premium and that's discount, at what point does it become discount? So you would never want to sell it. At what point? Because look at this, all this thing did is sell. So are you selling down here or are you missing out? And how would you decide? How would you make those decisions? So, in order to counteract that, what I've basically decided to do and have backtested this, and it works pretty effectively, is that once you isolate what I call a bare noise floor in premium, once you've isolated that, I mark it out. And then I'm looking for a bull noise floor in discount. And it would just be anywhere below the mid of that bare one. So if you see one down here, which technically you do here, right there. No, no, I'll show you why you're seeing what you think, why you're not seeing what you think you're seeing. Okay, so but the main idea is that you have a bear one up here and a bull one down here, and that's how you decide what's actual premium and actual discount, so that you have another analysis point to decide whether or not to go short. Like if you're all the way down here, are you going short? If it comes up to here, are you going short? Those kinds of things. So that's one concept to keep in mind. But the main idea is that what we're looking for is a higher high and a lower low that breaks through a previous higher high and lower low. And that is a bare one, as what I call a bare noise floor. And why I call it a noise floor is because in audio, that is the sound level at which if you try and get above or below, I guess it just depends on where you're coming from, you'll hear sound. You'll hear shh like that. So it's like basically, you don't want that. It's not going to happen. If you go past that, something bad is happening. So you don't want that. So the market, generally speaking, will, once it's created this, will have to deal with it before it does anything else. In other words, you see this here, it comes up like this and up like that, and then it looks like it's going to hold, and then up and then down. So it just created one right there. It has to deal with. That's not a higher high. Yeah, it is. Yes, it is. It absolutely is. No, a higher high was the here. You see a low and a high right there, and then a higher high and a lower low. Boom, like that.
Why discount this one?
Because it didn't do anything with it. Doesn't mean anything to us. We don't have to wait for it to do that. It didn't do that. It's doing what it's doing. We don't need to anticipate what it's doing. We only read what it has done. So the fact that it skipped that and didn't break through that is irrelevant to us. So you can see that it hit a higher high here and a lower low and a lower low there. So as soon as it broke through here on this day, that is your bare, there's your bare noise floor right there. So what I would do is I would draw that out in time like that and say that's premium. And then anything below it is potentially discount. So then we look back here and go, well, do we have one here? You do. Lower low to a higher high. So that's a bull one right there. And I'm going to give you lots of examples. So even though I'm kind of laying out the theory, this is just the theory. We're going to get into practice. So there's your bull one right there. I hate that is on there. So I'm just going to draw a line out so you understand how this reacts. And then here's your bear one. It's the first time it puts in a low and then retraces. So so technically, I guess I would say that that would be that, but it didn't break. Yeah. This is technically another one. So if you're following the rules of if it puts in a low and then it retraces above a high and then continues lower, like that's actually it right there.
That's not another high. That's a lower.
Yeah, it goes up higher high, lower low. And it did it over this hour period. Higher high, lower low.
The bull bars there, it doesn't qualify.
If it, yeah, that's right. It's not the lowest low. So you could extend it down to here, and there would, from a practicality standpoint, there may be nothing wrong with that. But it just depends on how precise you want to get. I tend over the hour period to not get that precise. I just look at it this whole big leg as one. But you can see why doing that would have probably made me miss out on that short right there. So we'll come to that. Now I want to draw a square just to show you how the functions of the roughly half. Okay. Oh, I know what I did wrong. I'm a goofball. There you go. There's your half. Whoops. Okay. Okay. Like that. So, why I'm drawing this all out and making a point of this is because what I want to point out here is that basically in a lot of cases, if this is discount, the market will be reactive at the high and at the mid. But if it's not reactive at the high, it was, then we are looking for a couple of follow-on things. There's a logical sequence that we're going to try and go through. But the main idea is that I want you to be able to see that when you see one up high on your screen and you see one down low on your screen, once the high one happens high on your screen, it is going to the one that's low on your screen. That's where it's going. It may be going further, but it's going to that one. And that's how the markets are going back and forth. They are looking for these lines, these noise floors I'm telling you about. They're going to retest them, and then they're going to go down to one that's on the opposite side, lower. And then once this one gets built, it's going to go up to one that's up on the high side. Okay? In almost every case of a turn that is going to last, you're going to see this formation happen. And that's what I want you to point out. So, do you have the concept of the higher high and lower low in premium and discount? Does that concept ring true to you?
So essentially, you're looking for whether it's in premium or discount.
Mm-hmm.
Then when you find out which one it's in, you look for a noise floor, and the market understands that the noise floor is something like audio you don't want to be there, so it's going to quickly rush to wherever it needs to go.
Yeah,
depending on whether it's in premium or discount.
That's right. If it sees a noise floor in premium, it is going to reject that. It's going to go, this is not good. We are not going higher. We're going to go down lower, and we're going to go to a noise floor that happened in discount. So it wants to get right there. That's where it wants to get here, and then it wants to get there. If this doesn't hold, it's going to that. Okay? That's what it wants. That's what it does over and over and over and over and over again. So to build on that concept on the higher time frame, We can't just treat every single one equally because you'll see they're everywhere. You get a bull one that happens right here. See it right there? Tell me if you see it.
There would be the lower
Yeah,
low,
that's the lower low.
and that's the highest.
Yeah, any one of those are the higher highs. So, let's take the drawing away. Does it hold? No. And then it does another one right there. Lower low, higher high. Does it hold? Nope. Then it creates a bear one. Does that hold? Briefly, overnight. But it says, no, we want more premium. Why? Well, because look, if I take this one here, and I draw that out, where does that roughly run to? Sorry, that's
It's just barely in premium.
yeah, it's just barely in premium of that one right there, and then it runs down. And where do you know? Since the top of this one has been tested, where do you think it's going? Minimum. It's going to go to the mid of it. And once that doesn't hold, where do you think it's going? It's definitely going to the bottom. It's definitely going to the bottom, and it may go further. And since there isn't a noise floor, do you see a noise floor over here? A bull one? Nope. So it's probably going to go until it creates one, which it does right here. Now
Why is that not a noise floor?
because it doesn't go higher than it. You have a bear one right here, and it doesn't go higher than it. You have to, this is part of the logic. You have to cascade them.
Does there have to be a higher high before a lower low?
Mm-hmm. So you have what you have is this. You in here you have one like that. You have one there on a lower time frame, but as it comes up, it doesn't take out that one. So if I had done that correctly, it would look like this, and then like that. So since this one didn't take out that one, this one takes precedence. Then once that happens, if you get down here and it can't take that out, then it creates another one. Then that takes precedence to go to there.
I thought this is the one that needs to take out.
No, it doesn't.
Because that's the lowest low.
It doesn't need to take that out because it's look what happened. So this continued all the way down, and then after taking out the low, it created a bull noise floor right there. You see it? The lower low to the higher high. And what happened? It pulled back to the mid, and then it took it out. And where did it take it out? Right there. That logic will continue to play out over and over and over and over and over again. It's difficult to simplify because describing what it's doing and then what it will do successively will take a little bit of time to understand. But basically the idea is that price basically moves like this until, and I'm oversimplifying, until it goes up, goes down, goes higher, goes down like this, up, and then like that. If it does that, I consider that a bear noise floor in premium. And it is going to go down until it finds it's done. It's got all that it needs to run back higher. And so then it's going to do the same thing in discount. So if I were to break this down, oops, let me use a different color. Okay, if I break that down and I'm going to do this in half, roughly in half. Oh, well, that square is not in half, but you get what I'm saying. So this is premium, and this is discount. Now it didn't turn immediately in discount, but down in discount it created the breaker. Now the next thing that you do is that when you see the low and the breaker high, then you go to that and you do the same thing. You go, what's the half of that? And so then you got, okay, there's premium, there's discount. So you can start forming a relationship between these two and start saying to yourself, okay, what has it done? It had a lower low and then it went higher, and then it couldn't go lower, and then it broke again. So what do I expect it to do? In this case, I would expect it to bounce off of here or right through here, which is the mid. And I'll show you this in candles so that it's not just drawings. But that's the main idea. That means that the market broke this, expecting to go lower until it turned around and broke it back the other direction. And then in most cases, you're going to see it. Look, what's it going to do? And you have to look through time frames. You have to say, okay, on what time frame did this do this? If it did it on the hourly, then it's going to look for a 15 and 5 minute location up through here until it finds it. And then it'll repeat the process. You tracking?
I don't know how you chose 15 and 5 minutes.
Just because they're lower. Okay, so let's go through some examples. All right. So here I identified a premium breaker, premium noise floor, excuse me, in the drawings, and then it's important to understand that the logic of this idea is being played out in ensuing bars. So I'm not really concerned about it just yet. I'm not looking at this and saying, oh, the first bull breaker I see down here, I want to buy. I'm not necessarily saying that. I'm just saying the bear one has been created and its mid has not been tested. So the next thing I'm actually looking for, and we're going to try and build a checklist, is does this low get taken out? So it got created, then does this low get taken out? Yes, it does. Okay, so what's that mean? What do you think that means? It's probably going to try and continue. Doesn't mean it will. It just means it's going to try. So then it comes up and it does it again. Okay, and do you see the what looks like a bull breaker actually become a bear breaker or bear noise floor? I don't know why I keep calling it that. So lower low, higher high, lower low. See it? So now you go, okay, so this mid has not been tested. It will be. At some point it will be. But now there's another one. Yes. So you go, okay, well, will the mid of this be tested? So let's draw that on there. And you can see right away during this happened overnight. What happened in these white versus gray? White is the daytime. So 9:30 to 3:30 or whatever. This is the overnight. Gray is the overnight. So right during the daytime, what did it do? Came up to the mid of it, didn't it? And then did it try to go lower?
I mean, yeah,
but it failed. It failed. Okay, so that's your first clue. That is your first clue. It doesn't mean it won't go lower, but it may not need to. So you're going, okay, wait a second here. That's interesting. So follow the logic. We had a bear one. Get created, got confirmed, mid hasn't been tested. Had a bull one, got invalidated, mid tested, low not met, didn't get achieved. So what is the first thing that we're looking for now?
The mid of the original.
Probably the mid of this original to get tested. That's right. Where would we expect that to happen from, given only the logic I've given you? Well, no, just use the terms I've given you. Don't make up shit that you don't know about.
Where would you expect it to test from? The bull noise floor?
The bull noise floor, right here. The bull noise floor. Because that's telling you that the market has turned around, isn't it? It's suggesting to you that it might be turning around. Yeah. And does the mid of that get tested? Yes. And does its high get taken out? Yes. So what does that mean? It's likely going to go higher. Now, does that mean it has to go straight up? No. Could it come back and test this again? Yes. All it has to not be able to do is it can't take that low out. If it takes that means it has to go lower. That's right. But if it took this high out, we think it's going higher, especially since it's below this one and the mid has not been tested. That logic is pure. There's nothing else to it. Yeah. Okay? So what happens? It comes down, it tests it, it confirms the bull breaker, which basically says, hey, we're done with the shorts. But does it get to the mid? No. So we still think it's probably going to go there. Now, I'm not going to explain or get into why this is a perfectly legitimate, perfect, awesome, amazing buy. I won't go to there yet, but you will learn that. All right. So, and this is on the hourly basis. It happens on every single time frame. This is what that day looked like. Horrible. This looks horrible. Yeah, this is what we were just looking at right here.
Yeah, right, but where is that?
That's right here. Oh,
Where's that on that one?
right here.
No, on the big one.
Holy crap, Matt or Caleb. Right here. This whole thing
Is the end of that.
is the end of that.
Gotcha.
This is an hourly. This is 1 minute.
That makes sense.
Okay? So it looks like crap, even though it's completely bullish and everything you should have been doing all day long is buying. Right? So that's tricky because when you come down into this, when you're way down into like this world, it can seem like this is crap. This is horrible. It's not horrible. This is wonderful. You just don't understand what's going on in the bigger picture. That's what I used to struggle with. Okay, so check it out. 1 day forward. I want to point this out because I'm going to put this in your quiver. This is called the last stop trade. This is called a noise floor last stop location. If this is going to work out, if it's going to hold, the last place it'll come to is the down price of the bull breaker, of the bull noise floor, excuse me. Right there. That price. One tick. And then up she goes. Okay? Now on that day, you would have had to have bought above it because it already happened in the overnight. Okay? So that would probably have been tricky. You'd have been scared, blah, blah, blah. But what does it do? Where does it go to? Right to the mid. I did not draw these pictures on this day. I drew them days before. Isn't it amazing that it did exactly what the theory said it was going to do? Days before, and there it is. Boom, nailed it. What does that day look like? That looks like this. Boom, 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 boom. Way deep, pull back, and then trend the rest of the day. Why? Because it has gotten everything it needed to get. It's picked up those last stops, and it's never coming back. And this is one of those days when I would look at and like, how the heck do you get on one of those? How do you get on one of those kinds of trades? I'll tell you how. You know exactly what it's doing. You know exactly what it's doing from the hourly time frame. That's how you get on them. Okay? So where does it go? So, is this trade over? For us it is. For us it is. The bull breaker's back here. We tested the mid, we tested the last stop, and we went to the premium side. This trade is over. We're done. Could it go higher? Yeah, of course. Where do we think it would go if we thought it was going to stop?
At least the high.
At least to that. And if it breaks this, then something else is going on. So
you'd have to look at prior bars.
Yep. So let's just see what happens. Okay. Now, here's what happened. Check this out. Discount noise floor, confirmed, last stop tested, mid achieved. Anything happened in between then?
Another bull.
Yeah. That broke these ones. Okay. So what are we looking for? Two things. The mid, which is right there, and then the last stop right there. We're okay with that. And why? Because we may believe that it's going up here. Okay? So what would we be waiting for down here? We'd be waiting for a bull noise floor to happen down here. And since it doesn't happen on the hourly time frame, it means that we have to either buy kind of in the blind or we drop down to a lower time frame and see if we can find it there. So here's what that day looked like. It looks like it starts high, jumps up, rallies all the way down, boom, 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 boom. Oh, God, it kills us. This is horrible. And you can see that I'm mapping out the noise floors. See that I'm doing that? Mm-hmm. Bear one, breaks, shouldn't have, creates a bear one, mid tested, lower, mid tested, up higher, and then it channels up, comes all the way back to where? The last place it can be tested, and then it starts rallying. Now the wick went through it in this case, but that's okay because the bodies didn't close below it. So, I don't know why. Oh, I must have. Okay, I see. Well, now I can't tell where we were. So I guess that concludes the walk forward of that. Now I want to show you a little bit more detailed analysis. Now, here's where I want to get down to the theory of how you're actually going to process this information. When you have a noise floor, you can operate inside of it relative to itself. So like this one. This is a bare one. But it's large, and the overnight opens up virtually in the middle. When it gets created, there's two things that we care about. We care about the mid, which I already told you about, and then we care about the last, how do I say this? On a bullish one, we care about the highest up bar that it broke right there. Okay? That is our breakout trade. After that, we care about something else near the mid. On the downside, we care about the largest down bar, not the largest, but the lowest down bar of what it broke right there. So you see here, it's already at the mid, basically, of this. You see that?
Behind it or in front of it?
Yeah, behind it.
Yeah.
Okay. So anybody that sold here was underwater here, but now when they sell it again, this is where we think it's going to come back to. So you can see that gets tested and drops a little bit, but then it breaks right through. So once it breaks through the high of that, now we're only worried about the mid. So you can see that kind of works out. But once that's done, then we take it off of our radar. And then once this breaks through, then we flip it around. We say, where's the highest bull bar that it broke through? Right there. So we draw a line out. And you see how it bounced off of that immediately? That's because that's a breakout trade. That is a breakout notion, and that's right where your location is. And that relationship between bear leaving a bear footprint and a bull leaving a bull footprint, that's your breakout. That's your breakout trade. It won't always work, but you can always take that trade. So now here we've got the bull footprint tested, and it confirms the breaker. So do we want to take that again? I wouldn't unless I saw something in a lower time frame. So what are we looking for now? We're just looking for the mid of the original breaker. See that? Mid of the original breaker. This is where we're expecting the price to come back to and turn around. Why turn around? Because we had a bear breaker and a bull breaker broke it above it and confirmed. So now we think it's going to go higher. So sometimes you'll be in a situation where you'll have a bear one in premium, and sometimes you'll have a bull one that looks like it's in premium, but you have to go back further in time and see where it is relative to something larger. You see, you're always having to cascade in what time frame and over what period of time am I in premium and discount? Because premium and discount only work if you've built it into a specific context. You follow?
Yeah.
And that'll take time to understand. It's not going to be, you're not going to just immediately get it. But because we had this bear one that looked like it was in premium and then it broke, well, what that tells us immediately is that we are operating against a time frame way back there that is much larger. So that in somebody's mind somewhere, this is actually discount, which is why it was going up. On a parent time frame, this is actually discount. Even though it looks like it's in premium relative to this, it is in premium relative to this. But it's in discount relative to something way back there. And you always have to be aware of that. So this is what that day looked like. It bang, bang, bang. It looks like a full-on trend day all the way down to the mid. And it comes down. And then once it gets there, what does it do? It doesn't hold at the mid, but look at the last stop. Lower low to higher high, and then it creates a tiny one right there. Is this in discount relative to this? Oops. Relative to this entire frame? Is this in discount? Mm-hmm. Where do you expect it to go? To the mid, 41.81. And I can assure you it did. So that is a comprehensive analysis of how to do it. So now I think what would be worthwhile is going through and building some examples out. You can see this is all recent so that you can look at them, and I'm going to give you a protocol to follow. a way of you doing this yourself. So I'm going to give you a big enough time frame to work from and start building. Okay, here's what I recommend to do. I want you to take a big range like this. Just like that, and set it out into a whole, like a range. And then what I want you to do is subdivide it and work through it and say, okay, what I want to go do is look at the bottom, and I'm going to look at the top, and do I find noise floors there on the hourly time frame? So let's do that. Okay, we have the benefit of hindsight. So we know that's a higher high, we know that's a lower low relative to this. It didn't break that out, but it's a lower low compared to that, right? Same here. It's a lower low compared to that. So we know that we've got that. So all I want you to do is start selecting a time frame where you see a bearer noise floor, and then let's see what happens when we get the bull one. Okay, so here is the bear one. The bottom does not get confirmed. We know that the mid is a target that it wants to get back to. Do we see a bull one get created before the mid of the bear one is tested? So think of that logic. Do we see a bull noise floor in discount get created before the mid of the bear noise floor is tested? Do we see one? Tell me if you see one. Point it out.
Be that more to there. Okay.
There's one ahead of that.
Meaning further back?
Yep.
There to there.
Yep. That's one. What's the next one?
Behind it, or is the one I just pointed out?
Oh, there's one in front of it, right here. You see that? You see a wick up here and a low. You had a higher high and a lower low, and then a lower low and a higher high. I want to change the colors of them. Make this one green because it didn't work, or darker green because it didn't work. Okay, so here's what happened. We have this. This is a bear noise floor. I'm going to break myself for saying that. Bear noise floor. So let's just review the rules of what we know about the bear noise floor. Rules. 1. Market will decide what it's going to do based on this range. Will. Okay? 2. If its low gets taken out before the mid is tested, it's very likely going much lower. 3, if the mid has been tested, we want to see the low get taken out. If it does not, then we're looking for a bullish noise floor to form in discount. And those rules can be inverted for the bull side. Okay, so what happens? Creates one here, low gets taken out. Mid not tested, low gets taken out. Mid not tested, low gets taken out. Mid not tested, this is, but that's not, low gets taken out. So even though that is a bullish noise floor, it is, Did the mid of any of this get tested? No. So we are not thinking that in order for us to think that is going to take something out, it would have to have broken that. It's got to have gotten above where it started. And even then, we still think it's going to come back deep. So it's got to fail. It's not only got to fail to it's not only got to take this out. It's also got to fail to take that out. Fail to take that out, and then we know. Then we know for sure, or we can take a lot of confidence that it's going to turn around. Okay, so here in this case, it actually broke. It broke this high, but that was not enough. It then failed to break this low. So that was our first clue. Then it took out. Then it created itself. And then its high was taken out. So now we're really eager to get long. Now we really want to get long. And where do we think we're going to go? Any long we take, and this is where we're going to be looking from, we will be looking in this range, and I want you to see if you can tell me why we would be looking in that range. And we're going to try to get to this mid. That's what we think we should get to, right? Based on our rules? Why? That's right. Okay. So why would I want to buy here? Based on everything I've said so far. The bull footprint did not hold. It was taken out. Even though we went higher, and it was right at the mid, so we wouldn't have expected. Yeah, you would. So this gets created, and now we're looking here.
If you were buying here, you wouldn't.
You don't. You're not buying here. You wait for it to be created first. You do not buy ahead of it being created. That's picking lows. You don't have an idea. We have no idea when a low is going to go in.
Okay, your question confused me because you said, "Why would you buy here?"
Why would we buy? Sorry. Why would we buy in this price range? Is what I was trying to say. Yes, it is in discount. What is this? What is this price right here? What did I tell you that price was?
Is that the last stop?
It's the last stop trade. Okay, so where's the mid of this? Has the mid been tested?
Yes.
Yeah. So we expect the mid to be tested again, and since it's been tested so many times, do you think it's going to be taken out?
Probably.
Yeah. So we don't want to buy the mid. We want to buy below the mid because that's deep discount. It's like they dropped the price of dirt bike tires. They were down here, and now their price is coming down again. Now they're going to go. I got to wait for them to get even lower before I'm going to buy because I already had my chance at that price. It's not worth it. I want them lower. All this volume is coming in to lower prices, so I'm just going to wait until it bottoms out, and there it does. Okay. So this price range 38.90 to 38.67, that's still a huge range for us as traders. So we are looking for this price unless it gets all the way down to that exact price. If it gets all the way down to 67, then we want it basically right at 67. We're looking at that. But regardless, so then the next thing that we're looking for is, do we see a lower low and a higher high in this micro range that's also in discount?
Yes.
Where?
There's a lower low, and that's the higher high.
How about this higher high right here? That one's even better. Okay? So what price do we want in that? The midline. Yeah, we're looking at the midline and we're looking at the last price right in here. So 78.25. So now let's go look at what that looks like on the 15-minute. Oh, what day is this? This is Wednesday, March 15th. Okay, so here you go. Cool. There it is. This is exactly what I wanted to do. Now we've done all of our homework. Oh, where did I just move? Oh, that's okay. All right, so the yellow. The yellow is, we can get rid of that. The yellow is the 9:30 open. And that's all we need to concern ourselves with. All right, see 9:30, 9:30 to 10:30. That's the first hour of trading. Okay, so in the first hour of trading on the 15-minute, I'm going to get rid of this because you see where it is, right? I'm going to do it with marks. There you go. All right. So in the first hour, it does that. Now, let's go look at what it looks like on the 1 minute, on the 5 minute rather. Okay. So we already want to buy this price. We already think I'm going to make this a big fat. Oh golly, please, please stop being so gay. Fatten this up. There you go. We'll turn it green too because we want to buy it. Money haulers. Okay. We already want to buy that price. Where is it? Do you see it? Not showing up. It's not showing up on the 15-minute, but it is showing up on the. Oh, there it is. Okay, I'm retarded. Okay. So now the same process we used on the hourly, we are going to use on the 15. Same process. Do you see a lower low and then a higher high?
Mm-hmm.
Where is it?
It's that.
Right here. Yep. To right there.
Well, that's not. I mean, it's a wick though, isn't it?
No, it doesn't. Nope, no, not with this. Noise floors are all about the highest price and the lowest price. That's all it's about.
So it would be the first and last bar of that bull breakout.
Yeah, right here. So there it is. So now, where is the bull footprint? The highest bull bar that was broken. There's the footprint, and it holds for a little bit, but then it breaks. So I'm going to show you that here. That doesn't go on there. So I'm going to put those, what price? 38.95. 38.95. Let's call it that. To 38.79. Okay, fatten these up just a little bit. Okay, this is that bull footprint that I was telling you about. This is that highest closing bull bar in a bull noise floor. That's the breakout spot. Remember I talked to you about a breakout spot? Okay, so in the blue, you have your hourly noise floor, and in the red, you have that bar. What happens? In the creation of the bull noise floor, it's tested again, and tries to get higher, but it fails. So if it fails 1, 2, 3 times, where do you think it's going? Down. Okay, that's right. So is it going to hold the bull footprint again? Bull track? Is it going to hold that? No, it's not. It's going to break it. So where's it going to go? The last stop. If your trade is correct, it is very likely going to that price. Do you understand? If you're wrong, it's going to crush that. It's just going to go, and that'll be the end. And if this low gets taken out, the sentiment has changed. That means that bull noise floor is not a turning point in the market. It obviously means that it is not discount on a higher time frame. Because if it was, they would have bought it. You know, if you see a price that you wanted to buy at 1, shoot up to 10, and then it comes all the way back to 175, are you going to buy it again? Yes, you would. You saw it at 1, and it shot up to 10. If it comes back to 175, are you going to want to buy it?
That doesn't make sense.
Oh, golly, Caleb, hold on. Yeah, it does. buy it 110. I want to buy it at 1. It shoots up to 10. It comes back to 175. Do you want to buy it now? Yes, you do. Because it was good at 1.
You want to buy it? Yeah, sure. I guess. Yeah, you want to buy it. Still doesn't make sense to me.
Okay. Sorry. I'm being a little too hard on you. I apologize. It doesn't matter. I was just trying to make an object lesson. And I'm being a dick about it. So sorry. So, the footprint or the bull track gets invalidated because it was tested and the low of it was taken out. See the low of it right here, this low wick? It gets taken out by the first test, actually takes it out. So in my mind, even though it goes higher, I would be really suspicious if it didn't break through because it broke through the bottom. Now, it did it with a wick rather than the body, so maybe it could work. But I'd be really suspicious if it started to fail. It comes down, and then it doesn't even break through. So I would be really suspicious that I would cut that trade basically as soon as that bar got taken out. But that's a nuanced point I don't want to focus on. So it comes down to our last stop trade, right where we think it would be, and we would buy that, and then we would push out, and we would expect it to go to the mid of this higher thing. I got to go to the bathroom. I'll be right back. Let me pause this. Don't let me unpause this. Okay. So even though I'm throwing a lot of detail at you, the big thing that I'm trying to show you that I want to review is that I'm showing you how to frame a trade. I'm showing you how to take higher time frame information and start chunking it down so that it becomes actionable. When I first started looking at all of this information, it just gets like too overwhelming to me. Like every single thing must have a meaning, and I didn't know how to eliminate stuff that didn't matter to me or didn't need to matter to me. One of the hardest parts about trading is that every decision you make has a consequence. Every decision. Action, inaction, take risk, don't take risk. There will be a consequence. So, in a lot of cases, in all cases, in fact, you have to have every contingency already pre-planned and accepted as a part of your plan before you do anything. So, for example, let's back this all the way up on the 5-minute. When we walk into this morning, looking at the hourly, we are thinking it is possible that this price gets tested. This 38.67 is the last stop of that bullish noise floor. We're already thinking that. So we're saying to ourselves, well, if that happens, then we should expect that the market will indicate to us on a child time frame of this parent time frame that it is in fact going up. Does that hang together?
You're still running from the basis a couple of days ago that it still has to test the midline of what's further back.
Mm-hmm. Well, you mean on the upside?
Yeah.
Yep. So it has to get up there, but it doesn't have to do it today. And it doesn't have to do it tomorrow. And if it does test this and fail, that doesn't mean it's not going to go back up here. It just means it's not going to do it yet. So all we're trying to do is go, well, the basic logic is that when I have a lower low to a higher high, the bear track or the bull track is going to get tested, and then the mid's going to get tested, and then the last stop price is going to get tested. And each one of those three locations becomes an opportunity for us to think about buying with it to go back up to the mid of the previous one. Does that hang together? Mm-hmm. Okay. So when we come in this morning, we're looking at the 5-minute time frame right here. When we look at this, now that we're this low, we're only concerned with this price. We don't want to buy ahead of this price being tested, I think. But you'll come to that on your own. All I'm trying to do is show you the logic of this. I don't want to focus on the trading part of it. And I realize now that I've been doing that, which makes it complicated. I need to kind of like back up and just say like, this is This is actually the back testing process I want you to go through. I want you to be able to isolate the bear side and the bull side, and then be able to come down into the 15-minute and isolate it there, and then come down in the 5-minute and isolate it there. And once you've done that like 50, 60, 70, 100 times, then we can start talking about, okay, where do we buy? Where do we not buy? Where do we sell? Where do we not sell? Because I want you to be able to have a conversational ability with me about what you're seeing. If you just get focused on the buying part, you will exclude yourself from the possibility of actually understanding what's going on. And I did that. I did that exact thing for 5 years. So, we already believe that the bull noise floor is going to be tested here. So all we're looking for now is evidence on a child time frame that is meaningful to the bull side. So we come down, and that is the first evidence on the 5-minute time frame that that's going to happen. Why do I say that? Do you see a higher high here? Do you see a high here and a lower low, and then this higher high? So this broke that, didn't it?
Yeah.
So technically, all things considered, on the 5-minute time frame, it's already in the first 15 minutes, it's already revealed its hand. It's already said it tested that price and it created a 5-minute noise floor. Now, that's really small compared to all this, isn't it? But it's there. What does it do? Tests through the mid of it and runs higher. See that? Now, what is the probability that this is going to try and break that in your mind? Given what we've said, given the framing of what's happened on the 1 hour and now what we've seen on the 5-minute.
Wouldn't that be another noise floor?
It is. It is a noise floor. It's a lower low or higher high to a lower low.
I wasn't talking about that. I was talking about where it tested the midline of the bear, or I'm sorry, the bull floor.
Oh, yeah.
And then the next bar up.
Technically from there to there, it is. Yep. And then here's your footprint or your bull track. Tests it, wicks through it, then runs higher. Now that one's not, because it only went higher high, didn't go lower low.
Mm-hmm.
Bam. Now on the hourly basis, okay, so the 5-minute showed it twice before the 15-minute did. You see? So even if this comes all the way back, very likely now on the higher time frame that we have shown we are likely to go higher into a higher bear noise floor mid, which for our purposes at this moment is right here. So on this day, my first target might be 39.14. Does it get there? Right there. Now, this actually one of the things I just pointed out to you is what can make trading very difficult. All the time it's doing this, doesn't it look like it's failing?
Mm-hmm.
Doesn't it? But did it ever get back to that price? Nope. You have to be able to consider the whole thing. You have to stay in the whole context. And it gets right to the mid of this, right at what time? Bet you it started at 2 o'clock. 2 o'clock is right when it starts to take off. 2:15. So, and then I don't know what this does after this, but in terms of the rest of the day, but that's the whole process. And then probably goes up to the mid. So my point is that, and this is going to be tricky. I want you to start with the hour time frame, and you can put them all on the same page. Start with the hour time frame and pick out a higher high to a lower low, and then zero in on the lows and study using the framework I just showed you how price goes back to the mid of this. And let's just put this on there for giggles. Yeah, look at that. on that second day it got there. So this was the day we were just looking at, and then on the second day it got back to the mid. So once you're above this, you're probably only thinking buy. But that doesn't matter. I keep saying that stuff. You don't need to know that. That's not important. But I bet you when we look in here, let's go look in this price. I bet you we'll find, well, we can see one right there. I bet you will find a noise floor on a lower time frame. Let's go look for it. Because this is the one that gets us to the big mid. Okay. This is a 5 minute. Okay, we don't need that. This is the one that goes to the mid. So what are we looking for? In this case, all we're studying for is, does it, at what point does it invalidate this? And you have to answer that question for yourself. Because right now you've got the bull noise floor that was created. So you think it's going to go back to this mid. That's your hypothesis. But maybe it's just going lower. And it's just faking you out, right? You're going to have to go through that. You're going to have to study long enough before you can decide how to make that decision. Because remember, we said right here, right? Oh, it had already done that. Excuse me. There we go. So coming into 9:30. Oops. Oh, coming into 9:30, what happens? You have lows and then a lower low. And then it creates, you can say on any one of these, but right there, it takes out that high, that higher high, with a higher high, excuse me. So right there, you've got a bullish noise floor in discount relative to the price that's above it before the mid of the larger thing has been tested. Does it have to be tested today? No, doesn't have to be, but it could be. So if it wanted to go up, should it have done this and held it and then took it out? If it wanted to go down, sorry. If it wanted to go down, should it have created the bullish noise floor, held it, and then broke higher if it wanted to go down? No, it shouldn't have done that. So since it did that, I think at this point, by the time this 5 minute bar broke, we can be convinced that this is confirmation that the algorithm wants to drive price higher. And in fact, in this day, it does it like, and see, look at that. Right to the freaking tick. Nails it. Comes back lower. Holds it. And pushes through. Now, you see anything? The highest bull bar. See it? See the relationship? Higher high, lower low. Look what it took out. Lower low. Bull track. Confirmed. Comes back to both the mid of the entire range and the bull track. Leaving it intact. And it runs out and takes out the high. Do you see it? Okay. This is 59 minutes. I'm going to cut it right here. Hopefully this video audio is working good enough. Yeah.